Okay, Rastine, it has been a while since we've opened the markets quite positively here, and there's a lot of happiness and euphoria when it comes to offshore and what's going on and how those economic data prints are coming out. Is it just a matter of time for us here before we start feeling the same sort of optimism?
Well, generally speaking, a lot of this optimism and funneling down into improve economic prints. So this is mainly driven by higher confidence and higher activity in the economy, driven by your vaccinations, right? So for the U.S., you've seen them reach a milestone of having been able to inoculate a lot of people already at this point. If you look at it, last year the concerns were that a lot of these foreign markets, or ourselves included, actually were trading at expensive valuations, right? So it's not right at this point to think that the global liquidity is going to look for cheap markets at this point. If you're looking at it, MSCI World constituents are seen to grow their earnings on average by around 68% year on year this year, right? So for the Philippines, it's somewhere similar, right? But then in the Philippines, you see the prices lagging. They're actually going down, whereas in other markets going up, right? So I think in terms of expectations, what's happening is that expectations for earnings in other countries is actually being revised higher, whereas for us, it's still flat, right? So I think first quarter earnings, as you said, will potentially be a market catalyst for some of these issues.
Okay, when you're looking at the index levels now, Racine, can you say
Mhm.
that they are mirroring the economic expectations, or is it still cheap compared to what some of you are expecting? And there's just a lot of fear when it comes to picking up these equities, or will you say that it's actually not necessarily fully valued, but fairly valued with regard to the expectation of the economic recovery?
Well, if we're talking about valuations, right? Currently, in terms of rolled over expectations, earnings, we're still flat from the start of the year. So analysts really haven't revised their estimates downward or upward. In terms of PEs, we're currently at 17.5 times 2021 earnings versus your 5-year average of 18.1. So on the money, it's fairly valued at this point, right? But what the market might not be pricing in really is if there will be some earnings revision downwards, then that might in- increase selling pressure in the market more than what we're seeing now. So hopefully that's not the case, because at this point we're still seeing recovery in the second half as our vaccination program kicks into high gear with a target of inoculating around 70% of the population by the end of the year.
Now let's talk about the banks here. I know that you can't
Mhm.
really comment on specific banks, but just in general, it's a mixed picture because the non-performing loans seem to hit 5% by the year end, but also them saying that the second quarter will be better when it comes to loan growth. Will that loan growth offset? At least this NPLs, and have the banks already put aside provisions to cover that in 2020?
Well, a majority of the bigger banks have provision. Uh, just some were preemptive in nature. In terms of coverage ratios, we're still good. Um, Banks have actually been guiding NPLs to kind of peak somewhere around second, third quarter to the second half of the year. In terms of loan growth, we're also seeing that kind of recovering into the second half. But then, if you look at it, a lot of it is really contingent on how recovery is going to play out. Right? At this point, we're kind of in limbo. We're not sure where the economy is at. I think that's why we're waiting for consumer confidence figures and first quarter GDP and first quarter earnings for corporates, right? So hopefully the imposition of ECQ in the first and second quarter didn't affect outlook that much. So hopefully we do get back to that recovery story and the expectations for profitability growth year on year towards the second half.